Hey everyone, how's it going? It's good to see you. We just had the closing bell and it's been an exciting session. So let's take a look real fast. Let me share my screen and see what happened in the S&P 500. So let's look over here. During the day, we were very directional. So we started out low, right? We gapped down, but then we pretty soon, within half an hour, we started trading very bullishly. We traded above yesterday's close, and then we've ended probably pretty close to yesterday's close. Let's take a quick look at where we ended. Yeah, 0.01% up. So not on a say day-to-day basis, we're undecided, right? It's just chopping sideways. That's what we were talking about. We're chopping sideways. We're undecided. We're just bouncing between that MA50 and EMA 20. What's interesting to note, though, is that the MA50 and the EMA 20 and the EMA 8, they're getting closer and closer to, they're converging. And today's trading range spanned that entire space. The high was 438.14, whereas your MA50 is 438.09. So the high was actually a tiny bit over the MA50, and the low was 432.45, and our EMA8 is 433.43, and our EMA 20 is 433.27. So our low is a little bit below each of those. So our range has spanned this entire space today. And so we're getting squeezed. These lines are going to keep on converging until they will get very close to touching or they actually cross over. And at that point, our bars are going to be, they're going to have to be above or below those lines. And so we're going to have a direction picked for us pretty soon, maybe this week or early next week. And once that happens, we'll be able to comfortably say that we're moving in a direction. It's unlikely at that point that we would continue to consolidate. It's not impossible, but it is unlikely because once we get our lows above the MA50 or our highs below the EMA 20, or I guess at that point they would be all be together, right? So your highs would be below the MA50. Once that happens, free reign for institutional traders to either go long and short the market, right? So we're at this decision point, and it's getting close to that decision point. So until then, we are just chopping back and forth. And then on a daily basis, you might have a trading range and a trading trend, but you just end up pretty much where you were. So you definitely want to close those positions and not hold them into the next session because you won't be able to, if you just ended pretty much where you started, that's not very meaningful for a day trader. Okay, so we'll take a look at a larger macro view after we quickly review the day trades. You can see that in Bank of America, we went down, we hit this red line that we drew in the morning, and then we went all the way up. And what I'd like you to notice we'll probably see it in all four of these, but we'll see, is how, I almost arbitrarily drew these lines. I didn't arbitrarily draw them, but I wasn't precise in where I chose these lines. I just said, okay, well, these are the lows pre-market, these are the highs pre-market, here's an area of consolidation pre-market, here's an area of significance pre-market, and sometimes the post-market on the previous day. And I just like you to see how well we key off of these levels, right? So we come up, we touch here, we bounce off of it, we come here and we consolidate. We come here, we touch this line, we come touch this line. Okay, we come here and we touch it again, then we touch it again. So why is that? It's because on a day-to-day basis, we're trading based on volatility. We're not trading based on technicals. Okay, why is it that I can just throw lines up here and they seem to get touched, like significantly, not just touched, not traded through, but that we actually change direction when we touch these lines, right? So that's a very strong indication that you should see on every day when we draw these lines that the market actually reacts to those lines, which means that the market is trading based on volatility and not technicals. And that's why I keep saying, don't rely on your technicals. Certain moving averages will have significance. The VWAP, volume weighted adjusted price, will have significance. Which is, I guess, technically a technical indicator, but there's very few technical indicators that are actually really helpful in day trading. So if you see a day trading program, they're like, look at the RSI, look at this Bollinger Band, look at just completely ignore it. Okay. NVIDIA, I lost my lines. Oh, no, I didn't lose my lines. It just traded down and mostly in this lower region. So here, see, we bounced off of it, then we traded through, then we bounced off of it over here again. And then intraday, we could have drawn this area of consolidation right here. It's the same as this area of consolidation. It's the same as this sharp drop-off point right here. So we could have drawn another line right here throughout the day. So this one was created during the day, not during the pre-market session. And then you can see it reacted again over here. So again, trading very, very much based on volatility, based on emotional supply and demand, and not on technicals. Here over in Tesla, same thing, consolidating at this line, breaking through perfectly to this line, then bouncing off of it, then trading through perfectly to this line, then bouncing in between these two lines, right? And then coming out, revisiting this line, and then we're off. And then kind of close to this line, but this one is more reacting to this area of consolidation right here, okay? And then of course, if you had gone as a breakout, directional breakout, you would have caught this trend down this way. And same with over here. Not so much over there, but over here, right? If you saw the breakout or the bounce off of that line in the morning, then you would caught the trend downwards. And then the S&P 500, same thing. Just see where the areas of consolidation and the areas where you bounce off of are almost perfectly along these lines, right? And we drew these before the market happened. So that's just to reiterate, day trading, you're only looking at volatility. You're not looking at technicals. Okay, so SPY, it went up, right? So even though it looked pretty negative on before we started in the morning, it went up. But what did I say this morning? So we were looking for a break down below the EMA 20 and EMA 8 or a break above the MA 50. And we didn't get that. We've traded perfectly in between those things. So we're not directional yet. We're still expecting this to keep going sideways until we get the low above the MA 50 or the high below the MA 50. So one thing that I didn't look at this morning was the economic reports. And today we had retail sales. And what's really interesting about retail sales, it came in much stronger than the consensus. So we saw a spike in retail stocks today. And what's interesting here is X gas and X vehicles. So X vehicles is the same, it was just flat, but still well above consensus. Retail sales was slightly better than flat, but still significantly above consensus. And then X vehicles and gas significantly above consensus. But this one is the huge change from prior, where what we're saying is that people spend less money on gasoline. So that's not great for gasoline demand, or that's an indication that prices are too high and they have to come down in order for people to consume gasoline again. But removing vehicles and gasoline, people are spending money. They're buying stuff retail-wise, which is really interesting because we've been defensive, right? What we saw earlier this morning, we've been defensive. Money has been going into XLU, XLP. I'm talking about institutional money, not people, your normal person on the street spending his own money. So their activity, the consumer's activity is unexpectedly strong. and we saw XRT catch a bid because of that. This is a very strong bar. It's about 1.5 times the size of this bar or this bar or this bar or this bar. And so it's very strong, but it hit that MA50 resistance and then pulled back. So that shows me that there's not enough enough momentum to carry it to the upside quite yet. Tomorrow, if we get a low above the close, and then we break above that MA50, and then we get a low above that, and then we break above the MA200, then I'll be convinced. But at that time, the S&P 500 will have looked like it's broken above its MA50. Okay, so I don't necessarily have to look specifically at retail. I can just get that from the S&P 500. It's possible that the S&P 500 breaks above its MA50, but retail stays down here and consolidates. Right? It doesn't have to go up with the S&P 500. But if retail is breaking above this, I'm almost guaranteed that the S&P 500 will break above the MA50. But the whole point of saying that is that it's looking very much like retail will have trouble going above. And so what I would want to look at is in the retail sector, if my viewpoint is that this is going to go down from here, and this is a local high, then what I want to look at is stocks that are in the sector that are weak, that are still trending downwards. And today, retail went up 1.69%. I want something that went up less than that. Or even better, I want one that went down. And then I would go short that particular stock, because when the retail sector fails and bounces off that MA50 and weakens, the weakest stocks are going to plummet. So we can look at some opportunity. I was looking at some opportunities in that a little bit earlier, just before the closing bell. And then we can also, well, what if you're wrong, Kane? What if it does break out above that MA50 and you're wrong? Well, in this environment, especially in the chop, in this SPY chop sideways, I don't want to be super directional. I don't want my portfolio saying all longs, all calls, everything's going to go up, or all downward. We're going to bounce off of this MA50 and go down, and have a whole bunch of puts and a whole bunch of shorts. I don't want to be directional in my portfolio. I can be directional in single trades, but in my portfolio, I want to be relatively flat. So if I put on a call, I want to put on an equivalent put in a different name, not in the same stock. Otherwise, you're just wasting your money paying commissions. So I always want to be aware that I could be wrong, especially at a time like this. So my majority viewpoint is that it's going to go down, but I want to acknowledge that it could very well go up too. So I want to find a strong retail stock that did go up with today's action, and the sector went up 1.69%. So what if I could find one that went up like 2 or 3%? Then that one's really strong relative to its sector. So if the sector breaks out above the MA50, that one will surge far more than the one that went down 0.5% when the entire sector went up 1.7%. If that makes sense. So basically, I'm looking for one of the strongest retail stocks and one of the weakest retail stocks, and then I'm going to play those in opposite directions. And that way, either way, if I'm wrong, well, either way, if we go up, the one that's strong should move up a lot more than the one that's weak. And the one that's weak should fall a lot more than the one that's strong if the retail sector goes down. And so overall, I'm protected in each direction. And overall, I will make money. I'll make more money on the one that was in the same direction as the sector than I will lose on the one that was in the opposite direction of that sector. Okay. And so that way, it doesn't matter if it goes up or down. Net, I can make money. All right. So looks like there might be a question. Day traded and got so you got the 5 Heikin-Ashis and you put a sell but did not get filled. Okay, if you didn't get filled on a day trade, then you need to revise your order very quickly. If it's time to get out, it's time to get out. You don't want to try to split the mid and play between the bid ask, because those could be moving very fast, especially on a symbol like Tesla. So if we go back to day trading, the day trading charts, if I look at Tesla, so let's just say, let me do Heikin-Ashi bars. Okay, so let's just say I caught this movement upwards, and I said, okay, 1, 2, 3, 4. Okay, it's not a good example. Let's see. Well, let's just say you did do this. Okay, and 1, 2, 3, 4, 5. So you caught this movement upwards, you held through this, and then went a little bit higher, and then you finally got your 5 Heikin-Ashi bars right here, and you're supposed to have gotten 1, 2, 3, 4, 5. Okay, this was supposed to be your trade, and you're trying to exit, and you don't get filled. You need to adjust that trade, that order immediately, because this is continuing to move down. And so if you don't change your order, you would have to wait it all the way over here in order for it to get filled. And if you did an option, you would have experienced time decay. And so by the time you got over here, the price on your option would not be the same anymore. So you might have missed by a little bit on the second wave up, and then you're still carrying it today or into the end. So what you want to do is, when you're day trading, you need speed of transaction. You can't try to play with the market maker and say, oh, well, the bid is $5 and the ask is $5.02. I'm going to try for $5.01. You don't want to do that during day trading. Whatever the bid is, you're going to hit the bid, or whatever the ask is, you're going to lift the ask. You just want to execute. Just go at the bid or at the ask. And because we're doing that, you want to make sure the bid-ask spread are tight before you even enter a trade. Tesla should be very tight. But if you're trading a lesser known name, you want to make sure that the bid-ask spread on the specific option that you're trading is tight, because you are going to be hitting bids and lifting asks. Or you don't want to try to go in at the middle. So you just go in at the market every time you go in and out on a day trade. Otherwise, these runs happen, because if this is moving, it's moving quickly, and you don't catch it, then you're chasing it all the way down. Okay. So my suggestion, if you're still hanging on to it, is take a look at Tesla in the morning. Maybe we can look at that tomorrow morning together, and we'll see, is it going to open up or open down? And I don't know if you have a call or a put, but if it opens up, then we'll hang on to it, try to get out at least a break even, if not profitable area. And then if it's down, then we're just going to cut our losses immediately. Okay. Okay, so we were looking at retail. We were strong stocks within retail and weak stocks within retail. So we would go either long or short. And because we don't know the exact timing of, hey, this might consolidate, right? It might not just break out or break down. There's a reasonable chance, we already discussed when we were talking about retail, there's a reasonable chance that it could consolidate, because it came up to this level. If it's not super strong, which we don't expect it to be, it won't break upwards. But there was a lot of interest today, and there was a heavy money flow moving in. So it may not just bounce off that level and come right back down. So Tesla was a put. Okay, we'll keep that in mind tomorrow morning, and hopefully Tesla opens down, and then we'll be able to get out at least break even. Right? So there's a reasonable chance of consolidation, and therefore I don't want to rely on fast movement. Right? I just want movement. And one of the best strategies for that is a 1% extrinsic value. Okay, so if I go over here to my stock fetcher and I look in my sector, I look specifically for stocks that are within the NASDAQ and S&P 500 that are within the retail sector. And I fetch those. And what we can look for is retail moved 1.69%. Okay, so I want one towards the top of my table right here. So these are the sorted in strength. And this, I want to look for a strong stock that moved above 1.69% today and has a reasonably good looking chart. So immediately over here, I would be, okay, so looks like, okay, Dollar Tree for sure. There's not that many that were above 1.69. So I can sort like this and I will end at EXPE. EXPE is not looking great. AutoZone looks like it's probably one of the weakest stocks. Dollar Tree is looking very weak as well. Bath and Body Works, none of these look great to me. Okay, so in that case, I'm going to care less about did it outperform the sector, and I'm going to say, okay, was it just kind of close to the sector? And let's resort by strength. Okay, and just take a look at these charts. So Costco is looking really good. It's looking like a breakout candidate. I'm not really looking for a breakout. I prefer pullbacks because pullbacks you will get the option cheaper because either you're consolidating for a while and therefore have very little volatility, so your IV is low, or you pulled back, so that means your price dropped, and then your implied volatility shrink because of that as well. So I'm buying at a cheaper price of the option. So I prefer those to breakouts because breakouts, it's a surge upwards and that makes option prices more expensive. So TJX is looking really good. Pulled back down, consolidated for a long time. Today was a strong bar at 1.26%, not too far off from the 1.69%. So TJX is looking excellent. And then if I look on the bottom, we want to find one that fell instead of went up. So JD is a candidate, and that's looking pretty good, but JD is also China exposure. So I prefer a candidate that doesn't have that China exposure if we can find one. And so TPR is looking too strong, right? Or at least in today's movement was too strong. It's looking very weak, but today's movement was a little too strong. Walgreens is looking like a good candidate. It only went up 0.4%, but it looks like it would have been better 2 days ago. And then that brings us to Ulta and Target. These two are Target a little strong. So Ulta is perfect, down 0.78% when the entire sector was up 1.69 today. I guess it's saying 1.73 now. But 1.7%, the sector is up 1.7%. Ulta is down 0.78%. So Ulta is very weak relative to the sector. It's been weak relative to the sector over the last 6 months. That's what this scan is. It's the strength over the last 6 months. So it's near the bottom of the list. So overall, Ulta is very weak to the sector. And we can see right here, it's been in this beautiful downtrend right here. So my picks for today and for a swing trade, and this 1% extrinsic style trade would be a 30-day plus trade. And we would pick an option where the extrinsic value of the option was less than or equal to 1% of the underlying stock price. So I would look for an option whose extrinsic value was only $3.80 for Ulta, and then a call on the TJX side whose extrinsic value was less than or equal to 90 cents for TJX. And then I have different ways of calculating and making trades into risk-free trades, which people tell you is impossible. And it might be impossible when you first put on a trade, But after you've built in a little bit of profit in a trade, you can definitely turn a trade into a risk-free trade. So 1% extrinsic value is one of my favorite ways to play when I don't know the exact timing of something, but I anticipate a directional move. 1% extrinsic value is excellent because we can fairly easily turn it into a risk-free trade, which is like the gold standard of all investing. Is if you can if you can make money without taking any risk, then then you would just load up the truck, right? You just take that trade nonstop all the time. So uh, that's going to be it for today. I can't get into the details of how to do 1% exactly, how to put on trades to make them risk free. But if you want to learn more, let me know, and maybe at some other point we'll put a class together. Okay, all right. So that's going to be it for today, guys. Just remember, we are chopping sideways, but we are reaching a decision point in the markets where we'll have to choose to either go up or go down. In the meantime, we want to remain neutral in our portfolio, so non-directional in our portfolio, even if we are directional in our trades. All right. So I will see you guys tomorrow. We'll keep an eye on Tesla, and then I'll give you some direction on how you might want to exit that Tesla trade.